Greetings, critical learners. My name is Mr. Simbi and welcome to today's accounting class. In today's class, I'm going to be dealing with the cash flow statement. So if you have problems with the cash flow statement, today it is your day. Make sure you have a pen, pencil. You need to have a paper so that you can take notes. You will need a calculator because definitely we're going to do some figures. Here is my curriculum scope. So this is the entire cash flow statement that I've broken down here. However, I will not cover everything. I'll only look at the highlighted green parts. So if you have a problem with any of these parts, today I'm going to answer some of your challenges. Here are my objectives in today's class. I will calculate the change in investments. I'll calculate the purchase of shares and the proceeds from issue of shares. I'll calculate the proceeds from and or the repayment of loans. So I'm going to look at the entire change in loans, and I'll also do the net change in cash and cash equivalents. Here are the key words and language. Cash flow statement. You have to know what is the cash flow statement, a financial document that provides a summary of the cash and cash equivalents entering and leaving a company. We're talking cash inflows and cash outflows. So you have to know the format of the cash flow statement. That is very important. You have to know the entire cash flow statement format by head, by heart. It has to be in your fingertips. The examiner may not test the entire cash flow statement. However, you have to know it because he may test parts of the cash flow statement. What is cash inflow? The money that is received by a business from its operations. And cash outflow, the money that a business spends over its expenses. We're talking about during the course of operating. Here are some common errors that learners would make when they prepare the cash flow statement. That is the inability to calculate the correct amounts and incorrectly recording inflows instead of outflows. That is one of the biggest challenges, whereby after you've calculated your amount, you record an inflow as an outflow. That makes the amount incorrect thereof, or recording an outflow as an inflow. I'll try to show you today how you can make that not your problem anymore, that when you calculate an amount, you know it's an outflow, you record it as an outflow. And the other one is whereby you don't know the format, so you end up recording amounts in the wrong places, misplacing figures, whereby you have an amount that must be under operating activities, then you record it in investing activities. That is one of the most common errors that learners would make. But I want to encourage you, once you understand your format, you can avoid making these errors. Here is the exam writing competences. You need to work on this as you prepare for your final exam. Here's the pre-knowledge, what you should know already. In grade 10, we have done the statement of financial position, and you understand the different parts of the statement of financial position. And in grade 11, we also did the statement of financial position. In grade 12, we're going to focus on understanding share capital, and that there is an issue and a repurchase of shares. That is of great importance. We also did the statement of comprehensive income in grade 10 and 11, and in grade 12 we're going to be taking some of the information from there as we prepare our cash flow statement. Dear learners, let's go for an ad break and I'll see you shortly. Welcome back, dear learners, from the ad break. We are now going to begin to prepare parts of our cash flow statement. And to begin with, we're going to do the change in investments. What is the change in investments? Now, you will see that when a company has fixed deposits, that is what we will call investments. This is where a company has invested in another financial institution. Now, here are some of the problems that learners would face when they come to this section. The failure to record the change in investments. So at times learners don't know whether it's inflow or outflow. I'm going to help you today so that you can now know whether it is an inflow when it increases or decreases. We're going to shed light on that area. And then in grade 10, remember the fixed deposit, we've done it from grade 10 when we were preparing the statement of financial position. And in grade 11, we also did the fixed deposit as well. So in grade 12 now, when we prepare the cash flow statement, we want to see the change in investments when it has increased as well as when it has decreased. I have an activity that we're going to do together. Let's begin. It's an extract from the statement of financial position. You can see here, we began with 1 million of the financial assets, the fixed deposit. The question is, if I now have no amount at all, it's now zero. What has happened when I had 1 million and now what has happened? It simply means that investment has matured and therefore that money has now been deposited into the business bank account. So it is no longer an investment there, it is now cash in the business bank account. So we will now come here to the cash flow statement. Remember, it will be recorded under our investing activities. So under our investing activities, we would find two things. That is your fixed assets, that is the purchase, as well as the proceeds from the sale, as you can see here. The next thing that we record under our investing activities is the change in fixed deposit, change in investments. In this case, we had 1 million rands worth of an investment, but at the end of the year, now we see that there is no investment at all. That means that investment has matured. So we'll come and then we record it here as 1 million. The question is it cash inflow or cash outflow? When you have an investment, a decrease in the investment is cash inflow. A decrease in the investment is cash inflow. Yet an increase in the investment is cash outflow. In this case, it was a decrease, so we would have our cash inflow. Okay, I want us to move on to the next aspect. The next aspect is the cash flow from financing activities. Cash flow from financing activities. On the cash flow from financing activities, there are challenges that you may face if you do not prepare properly, because there is always the challenge of not being able to calculate the proceeds from the issue of shares. You have to understand that the calculation of the proceeds from issue of shares can be related also to note number 7, that is your ordinary share capital. So you must be able to link these things together. In grade 10, we dealt with the sole trader. So the capital that we were doing was the capital for the sole trader. In grade 11, we dealt with the partnership. But now in grade 12, we are dealing with what is known as ordinary share capital. So this is capital that is raised from the issuing of shares. And we are going to do an activity so that we can see how this will affect the cash flow statement. We are told that there's an extract of the statement of financial position. We have 2021 and 2022. And we want to see the amounts that we record under the cash effects of financing activities. But in order for us to do that, it would be good if we can open note number 7, that is the ordinary share capital note. Okay, so we are told here that on 1 May, the directors issued a further 2 million. So that means at the beginning we had an amount here, but we issued a further 2 million. So we come here, then we issue a further 2 million. All right, so this is 2 million ordinary shares here. This is 2 million ordinary shares that are issued at R2.75. Okay, have your calculators ready? How much in rands is that going to be? That gives you 5,500,000 over there. Then we're told on 30 November, 500,000 shares were repurchased. So I'll come here, then I'll say 500,000 shares are repurchased. All right, so these are shares repurchased. And these ones are repurchased at, we don't know the amount. Okay, but we are told these are from a disgruntled shareholder at 25 cents above the average share price. We will record this 25 cents on our famous triangle. Remember, the top part is what goes to the cash flow statement. On this bottom left, this is what goes to note number 7, ordinary share capital. And here on the bottom right, this is what goes to the retained income. So we are told that 25 cents is above. The above goes to the retained income. So here is the 25 cents. We need to get the average price so that we can get the cash flow amount. To get that one, it is very easy. We will now say the amount that we had at the end of the year was 26,250,000. All right? And then we would say 26,250,000. We divide that by the number of shares, which is 7.5. Okay? And then we're going to punch that in the calculator. We want to get what is known as average price. So let's see. On our calculator, we're now going to punch the 26,250,000, and then we say divide by the 7.5 million. That is the number of shares. That will give us now the average price of 3.50 Rand. That means at the bottom here, the average price was 3.50 Rand. And the only thing that changes average price is the issue of new shares. So that means on the issue of these these shares at the beginning, there was an average price that was calculated, and the repurchase of shares would be at that average price. But to summarize it, make it very quick, you get the average price here at the bottom. That is what you use above here, as long as the repurchase of shares is the first transaction that is happening after the total here at the bottom. If on the first line you have the repurchase of shares, so you can get the average price here and still use it at the top here, and that is your 3.50 Rand. So I'll now say the 500,000, that is the repurchase, multiply that by 3.50 Rand, and then remember, once it's repurchase, you have brackets, 1,750,000. Okay, and then I can get the number of shares there at the bottom then. How do I do that? I will simply say, at the end, I had 7.5 million shares, 7.5 million shares, and then since I'm going up, I'm going to do opposite the sign. So I'm going to say plus 500,000, not minus, but plus 500,000. Okay, then I go to the next one. It's now minus 2 million, minus 2 million, not plus 2 million, but minus 2 million. And then I'll then get 6 million. That means here at the beginning, it was 6 million shares. All right, 6 million ordinary shares here. And then how much was it in terms of capital? I'll do the same again, whereby I'll now say on my capital, at the bottom is 26,250,000. And then instead of saying minus, I'll now say plus, because it's the bottom up. So I flip the signs, I do opposite. So I'm going to say plus 1,750,000. And then I will now say minus 5.5 million. And then I'll end up with 22,500,000. So I'll come here, then it becomes 22,500,000. When I come here now, proceeds from issue of shares. We are told here we issued 2 million shares. It was easy. I would have simply said 2 million shares, and then I issued them at 2.75 Rand. At 2.75 Rand. That is going to give me 5.5 million. That is going to give me 5.5 million, which is this amount here. So at times the examiner can give you note number 7 as part of the cash flow. To prepare that, you should know that once you prepared your note 7, the amount would also be recorded in your cash flow statement under the financing activities. This is a cash inflow. On the repurchase of shares now, remember, we had done some calculations already here. We got the average price, which was what? 3 Rand 50. So the cash flow statement now is an addition of the 25 cents plus the 3 Rand 50. That will give me 3 Rand 75. That is what I would record in the cash flow statement. So I'll come here, then I'll say, on the repurchase of shares, how many shares did we repurchase? We repurchased 500,000 shares. And how much do we record in the cash flow? We record the 3 Rand 75 multiplied by 3.75. And that is going to give you 1,875,000. In brackets, repurchase of shares, in brackets. Now, there's another way that you could have done the very same thing again, whereby you could have added your amount that was in the note. How much did we pay in the note? In the note we recorded 1,750,000. Then you say plus the retained income amount. The retained income amount would be your 500,000 shares. Multiply that by 25 cents. And then once you do this, how much do you then get? You get 125,000. Then you come here, then you say plus 125,000. You close this, it will give you the very same figure. So these are two ways in which you could have done it. I hope I've shed light onto this. Dear learners, we'll go for an ad break, and I'll see you shortly. Welcome back, dear learners, from the ad break. We are now going to look at the changes in loans. Some of the challenges that you may face here is the inability to calculate the repayment and the proceeds from loan. So when there's a change in the loan, you may not be able to tell whether it's a cash inflow or a cash outflow, but we're going to shed light on that. In grade 10, we're able to record the loan in the statement of financial position, remember, under non-current liabilities. In grade 12, we still prepare the statement of financial position and we record the loan again. However, we're going to take it a bit further, and then we're going to look at the increases and the decreases in the loan and how that can become cash inflow or cash outflow. So here we have information from iBank. In 2021, the loan was 2,080,000. In 2022, the loan is 1,960,000. You can see here that we have a decrease in the loan. That is a decrease in the loan. Now the question then is, when we have a decrease on the loan, is it inflow or outflow? A decrease on the loan simply means we have paid the loan, so it's a cash outflow. A decrease in the loan, that means we have paid a part of the loan, so it's a cash outflow. But an increase on the loan, that means we've received more from the financial institution, so that means it's a cash inflow. So that becomes a cash inflow. Let's see what we would say here. Okay, now, already we understand that under our financing activities, we have two aspects. The first one is shares, and we have the proceeds from issue of shares as well as the repurchase of shares. And then the second aspect that is recorded under financing activities is our loans. In this case, the question then is it cash inflow or cash outflow on the loans. All right, let's explain this one now. On this loan, you can see it is a decrease, so that means it's a repayment of loan. So I'll come here and I'll then say, if it's a repayment of loan, already I know it's a cash outflow. So I can have my brackets in already. All right, and so I'm now saying my 1,960,000 minus 2,080,000, and then on the calculators, how much do we get? Then we get 120,000. That becomes cash outflow. We have repaid the loan or part of the loan, so it becomes a cash outflow. Very, very important that you indicate your outflows using brackets. Okay, I'm going to move on to the last part of the cash flow statement, that is the cash and cash equivalents. And we look at the changes that would have happened in cash and cash equivalents. Now, it is very important, dear learners, that at times when the examiner tests you on the entire cash flow statement, they can ask you to calculate from the cash changes or cash effects from operating, then you add the cash effects in investing, and then you add the cash effects in financing. Then you can get the what? Net change in cash and cash equivalents. However, the examiner can simply give you an extract of the current assets, and then they would want you to calculate the net change in cash and cash equivalents. We're going to do that, and make sure you have a calculator close to you. So, what we are given is information for the year 2021 and the year 2022. And we seek to calculate the net change in cash and cash equivalents. We know that here I'm going to have my cash and cash equivalents at the beginning. Okay, so this is at the beginning. That is 2021. In 2021, I have cash, which is how much? 72,000. But in the same year, I have a bank overdraft. This is where some of the learners will not record this bank overdraft. This is a very huge mistake. You have to record this bank overdraft. And you know your bank overdraft is a liability. So you come and say minus 147.5. Okay, so very important. Never forget to record the bank overdraft. All right, let's see how much this is going to give us. So I'll come here and I'm now saying it's 72,000. Then I'm going to say minus 147.5, minus 147.5. That will give me a negative now, a negative 75,500. So I'm coming here, I have a negative 75,500. Very important that you record it as a negative, for our calculator showed us that it was a negative. Then I will now have my cash and cash equivalents now at the end. This is cash and cash equivalents at the end. How much is that? There was no overdraft in this case, so it's 102,000. Okay, now the question then is, how do I get this net change in cash and cash equivalents? All right, so we're going to do the bottom-up calculation, where you start from the bottom, going up. From the bottom, going up. You need your calculator in this case. All right, so let's have the calculator, and let's see. The bottom amount is 102,000, so I have 102,000. But when I go up, I do opposite the sign. Remember the bottom-up principle. When I go up, I do opposite the sign. So that means I'm going to say now, is it a minus? No, it is not a minus. So what am I going to say? I'm going to say plus. Plus what? 75,500 plus 75.5. I do opposite of the sign, and then I get 177.5. And that's a positive 177.5. So I'll come here, then I get my 177.5. And that's a positive. I should be able to prove this. All right, I should be able to prove this. Let's see if we'll be able to prove this, whereby we can start off with our 177.5. Then I come and say minus now, because I'm going down now, minus 75.5. How much do I get? I get 102,000. So I should be able to do it going up, and when I'm up, to just see if my answer is right. When I come down, do I still get that same figure again? Very, very important that you do so. We understand that under investing activities, we have two main aspects. There is our fixed assets, whereby we have the purchase of fixed assets, as well as the proceeds from sale of fixed assets. All right, so I'm going to record the second part now of the investing activities, which is our investments fixed deposit. We have to be able to analyze the information and understand that if I had 500,000 in 2019, and then now I have 100,000 in 2020, what does this mean? It means that my investment has decreased. What does a decrease in investment mean? It means whatever that was invested has now been transferred into the business bank account that makes it a cash inflow. So a decrease in investment is a cash inflow. Yet an increase in investment would therefore be a cash outflow. Okay, so here on my fixed deposit, it is a decrease indeed, where I had 500,000 and now it is 100,000. So it has decreased by 400,000, and that is my cash inflow, a cash inflow in this case. Okay, and therefore, if it was an increase, it was going to be a cash outflow. Let's go on to the next aspect. I will now focus on my financing activities. It is very important, very crucial that you relate your financing activities to note number 7. And I have an activity here that we're going to do together. Make sure that you have somewhere to write, and your calculator must be close to you, because I'm going to need you to punch in certain figures and then you give me the figures over here. All right, let's see. We are told here that our share capital in 2019 was 7.2 million. That means at the beginning year. So that is my 7.2 million here. All right. I would want to relate these two together. Note 7 together with the cash flow. We want to see the relationship between them. And then the balance at the end, it's 8,281,000. So you have my 8,281,000 over here. You still following me? All right, cool. Now, we are then told share capital on 1 March 2019. So this is the beginning of the financial year. The ordinary share capital comprised of 800,000 ordinary shares. So that means right at the beginning year, I have 800,000 shares. All right. So I'm going to say ordinary shares. This is at the beginning. Let's go. We are then told a further 200,000 shares were issued on this date. So here, a further 200,000 shares. Okay, ordinary shares issued. At what price? We are not given the price here. Is it a problem? No. One of the tricks that I need to teach you is, if you cannot get the figure then, continue. In accounting, you'll find that as you continue, some of the amounts will come out on their own. So in this case, I don't know the amount at which we issued these shares at. But let's continue, and then we'll see how we're going to get that figure. Then we are told, on 29 February 2020, so this is on the last day of the financial year, the company repurchased 90,000 shares. So I'm coming here to say 90,000 shares are repurchased. All right? So these are repurchased at 81,000. Do I record this 81,000? They say at 81,000 shares above the value of the shares based on the average price of 9 Rand 10 cents. That means I need to bring my triangle here now. And then I'll now say, here we're told that they were repurchased at 81,000 above. So remember, here is the cash flow. Here is the ordinary share capital, and here is my retained income. The amount that is above goes to retained income. So here I have my 81,000 over to retained income. Above, the value of the shares based on the average price of 9 rand 10 cents. So I can quickly say, if the average price was 9 rand 10 cents, if I say 9 rand 10 cents multiply by the 90,000 shares that we repurchased, multiply that by the 90,000 shares that we repurchased, how much are we going to get? Let's quickly see. So if I say 9 rand 10 cents, and then I multiply that by the number of shares. How many were there? 90,000 shares. 90,000 shares. How much do I get? I get 819,000 rands. 819,000. All right? So that means I'm going to come here and I'm now going to say 819,000. So here they say the value of the shares, the average price is 910. So here I'm going to get my 819,000 over here. All right? So I understand that my average price goes to ordinary share capital. Ordinary share capital. So my average price is going to be here, 9 rand 10 cents. I put my bracket here. So the 819,000 comes here now. Okay? And then let's continue. So I should be able to get that figure there now. How do I get that one? I'm simply saying 800 plus 200 minus 90. All right? Let's quickly have our calculators ready. Okay? Let's go over it. We will now say my 800,000, then I say plus 200,000, which is now a million. Then I'll say minus my 90,000. Minus 90,000, that is going to give me 910,000. So here at the bottom, I have 910,000 ordinary shares. But I need to get this figure here. How do I get that one? To get that one, it's quite simple. Please follow my instructions. You begin with the amount at the bottom, which is 8,281,000. So I say 8,281,000. 8,281,000. I go up. So if I go up, I do the opposite. So I say plus. Plus what? 819,000 plus 819,000. Then I come to the amount at the top now. Then I say minus 7.2 million. Minus 7.2. That's going to give me 1,900,000. So here I have 1,900,000. Okay. So when I come here now, I now say proceeds from issue of shares. I know that I have sold 200,000 shares, but the amount that I've received is this one here, 1,900,000. That is my proceeds from the issue of shares, 1.9 million. That is what I've received from the shares that we have sold. Now, you will see you are not going to find it easy to get this 1.9 million if you had not opened note number 7, which is your ordinary share capital. So at times the examiner may not say prepare, but you should train yourself to say, okay, so if I'm given this information and I can see that there's certain information that is missing, if I can quickly do my note number 7, I should therefore get my proceeds from issue of shares. Okay, now, the funds that we use to repurchase shares, that one becomes easy now because I can simply say my 81,000, I'm going to get the amount on the top, on the tip of the triangle. The amount at the tip of the triangle, it's 819 plus 81. That is what I get there, which is how much? 900,000. Okay, so I'm coming here to say funds used to repurchase shares, it is your 819,000 plus the 81,000. Okay, and that should give me 900,000. Very important. This must be in brackets. This must be in brackets. Okay, the second way was for you to get the price per share, which in any case was not going to be very difficult because already you know the average price is what? 9 rand 10 cents. Here the average price was what? 9 rand 10 cents here. So you are just going to get the amount above average price, where you would say 81,000 divide by what? Divide by the 90,000. 81,000 divided by the 90,000. So if you come here and you'd say the 81,000, so we will now say 81,000, then we divide that by the 90,000, which is the number of shares that we repurchased. And then we get 90 cents. So the price that was paid above is 90 cents. So if I say 910 plus 90 cents, that's going to give me 10 rand. So I can also come and say the funds used to repurchase shares. How many shares did we buy back? We bought back 90,000 shares. And what did we pay? What did we pay? What did we pay? Above the average price, 10 rand. And then it will give you your 900,000. Dear learners, we'll go for an ad break and I'll see you shortly. Welcome back from the ad break. We are now going to look at the other part of our financing activities. So remember, we did the proceeds from issue of shares. We also did the funds used to repurchase shares. So we're going to do now the change in loan. You can see here in 2019 that our loan was 1.2 million. But in 2020, our loan is now 900,000. That is a decrease in the loan. A decrease in the loan means we have repaid the loan. That is a cash outflow. That's an outflow. But an increase in the loan would have been a cash inflow. So I'll come here and then I'll now say my 900,000 minus the 1.2 million. And then I know it's a decrease. So already I have my brackets, which is a negative 300,000. That is a cash outflow. I have repaid the loan. Cash outflow. Okay. Now, we're going to come to the entire cash flow statement now. So at times the examiner would want you to get the net change in cash and cash equivalents, this one here. And you get it by taking this one. Remember, that's negative, and you get this one. So this is one way the examiner can test us on getting this amount here, where you just add your cash effects from operating activities, your cash effects from investing, and the cash effects from financing. This is one way. The other way is when you are given these amounts as this, which is now where you calculate your net change in cash and cash equivalents. So you will now say your cash and cash equivalents at the beginning, you have 5,000 here. But you also have a bank overdraft of 220. That means I'll come in then I say minus 220,000. And then I close my bracket. Now, I want you to see something if we punch this on the calculator together. Because if I say 5,000, then I say minus 220,000. On my calculator, I'll get a negative 215,000. Very key. So I'll come here, then I'll say minus 215,000 in brackets. Then I'll come now to the next year where I have my cash and cash equivalents at the end. And that is 56,500. So I'll come here, I have my 56,500. What I want is that figure there at the top. So we need a calculator again now. And we'll now say, remember, we're doing the bottom-up calculation. So when you do the bottom-up calculation, you are calculating from the bottom going up. The idea is you reverse the sign of the second amount, not the first one, the second amount. So the 56.5, we're going to enter it as it is. But the 215 now is no longer going to be a negative 215. We then record it as a positive, plus 215,000, plus 215,000. And then we get 271,500. So I'll come here, and then I get 271,500. Okay. What I would want to encourage you is, just so you can be sure of the figure that you have got, you should be able to do it from the top coming to the bottom, because we did it from the bottom going up. So if we start from the top, we are now saying from the top, okay, let me just erase everything from my calculator. So from the top, we're now saying 271,500. Then I say minus what? 215,000. How much is that going to give you? 56.5. So it means the 271.5 is indeed correct. Okay, so make sure you get this idea that when we do the bottom-up approach, we start from the bottom, the second figure, then we change its sign. Then we can do that as we go up. And then that is how we would calculate our net change in cash and cash equivalents. Dear learners, we are going to go for a short break, and I will see you after this short break. Welcome back from the ad break. Here is a recap of the curriculum scope. I want to encourage you to understand and know your entire cash flow statement, because parts of it can be tested, but the entire cash flow statement can still be tested. And these are the areas that we have touched in today's class. Here is the recap of the keywords: cash flow statement, all right? And we also did cash inflows and cash outflows. Here is a recap of common errors: the inability to calculate the correct amounts and incorrectly recording inflows instead of outflows. I think in today's class, I've tried to show you how to avoid such errors, as well as misclassifying operating expenditures as investing cash flows. You can only be able to avoid this kind of mistake when you know your format. That is, from the operating, I go to my investing. From the investing, I go to my financing. So that at the end of the day, you know what goes in every part of your entire cash flow statement. Once you know your format, misplacement of items becomes a thing of the past. For further exam practice, and I want to encourage you to continue practicing, you can go to the November 2020 question 4, November 2019 question 5, May-June 2019 question 5, as well as the November 2018 question 4. These are good examples that you can practice from. Dear learners, it is always a pleasure to have you in my class, and I hope to see you again very soon. From me, it is goodbye.